Still not completely comfortable with closing above 30,000, it is currently hard to see where the Dow Jones is going to get its latest injection of energy. Approval for the Moderna vaccine, which the FDA meets to discuss on December 17th, could be a shot in the arm. The green light for the Pfizer-BioNTech preparation failed to garner a positive reaction, but that's arguably because the UK and Canada have got there first. With the Moderna vaccine, the USA will likely be the first nation to make a decision on its emergency use authorization, and therefore could lead to a different reaction from investors if the FDA does give it the thumbs up. On Wednesday evening, there's then the final Federal Reserve meeting of the year, and though the central bank isn't set to pull the trigger on further stimulus, investors will be paying close attention to the statement's wording in light of the lack of fiscal aid over the last couple of months, something that the Fed has been insistent about for what feels like half a year now. It'll also be interesting to see how the overall market mood is impacted by any Brexit news that continues to come out this week. Already there has been evidence of sort of widespread concern over a no-deal Brexit in the last couple of sessions. And though that is less relevant to the Dow Jones and the US markets than it is to the FTSE and the European markets, it still might have an effect as the week goes on, dependent on what other headlines arise. And even if investors are keen to ignore it, COVID-19 is always lurking in the background, ready to sour the mood in the market's quieter moments, especially since daily deaths recently crossed the 3,000 mark in the States. In terms of data, Tuesday's Empire State Manufacturing Index is set to rise from 6.3 to 6.9, while import prices are expected to rebound from minus 0.1% to 0.3%. Industrial production, on the other hand, is forecast to drop from 1.1% to 0.3%. Wednesday is then the biggest day for data leading into that Federal Reserve meeting in the evening. Though the core retail sales figure is expected to remain unchanged at 0.2%, the standard reading is set to drop from 0.3% to minus 0.2%. More importantly, I guess, alongside that, the flash manufacturing PMI is forecast to retreat from 56.7 to 56.0, with the services PMI also going back from 58.4 to 55.9. It'll be interesting to see again, like, if that barrage of potentially bad data has a negative impact on the Dow Jones sort of in the middle to second half of the week, and whether that will prevent it from regularly closing above the 30,000 mark. On Thursday, you've then got the usual job disclaims figure, which is set to drop from 853,000 to 780,000. Whilst on Friday, there are the results of the latest bank stress test. So that's not until the evening, so that might have a limited impact on trading. Beyond the US, no less pressing than in months prior, when investors were desperate for signs of recovery out of China, Tuesday does see a huge data dump of Chinese data, which tends to always be of relevance to the Western markets. These include the fixed asset investment, industrial production, and most importantly, retail sales readings. The fixed asset investment number is looking to rise from 1.8% to 2.6%, whilst industrial production is expected to edge 0.1% higher to 7.0%. As for Chinese retail sales, the numbers covering November should hit 5.1%, up from 4.3%, and the best level since those reported since last December. It is worth noting, however, that last December, I think the number was at like 8.0%, which, so that means the Chinese retail sales still have a way to go to recover to their pre-pandemic levels. But like I said, that positive Chinese data could help buoy the markets on Tuesday, as long as other headlines don't come in and spoil the good news.